Welcome to the Real Estate Deep Dive with Paul D. Garrison from JP and Associate Realtors. Today we're going to be taking a look at what's going on with interest rates. The geopolitical uncertainty around the conflict in Ukraine is having a noticeable effect on mortgage rates. I don't want to, by any means, downplay the severity of the conflict that's going on there, and wanted to express that our hearts and prayers go out to the Ukrainian people in their fight against this unprovoked attack. So with that said, let's start out by taking a look at Sam Khater, the chief economist at Freddie Mac's quote. Geopolitical tensions caused U.S. Treasury yields to recede this week as investors moved to the safety of bonds, leading to a drop in mortgage rates. While inflationary pressures remain, the cascading impacts of the war in Ukraine have created market uncertainty. Consequently, rates are expected to stay low in the short term, but will likely increase in the coming months. So the big takeaway here is to take a look at that kind of that orange number down there, the 30-year fixed rate mortgage. As of this, the third, it was at 3.67%. Just a few weeks ago, of course, we were around 4%. So we're seeing a bit of a relief or decrease in the rates being charged for mortgages currently. So there are three things I want you to note about this slide. First is where they talk about the U.S. Treasury yields. The reason for this is that interest rates tend to follow the 10-year Treasury yields, and I'll go into more detail about that a little bit later in this presentation. The second is where he comments about market uncertainty. Markets don't like uncertainty, so the big question is, when will this become something certain? The third thing is to note that in that last sentence where it says expected to stay low in the short term, I would look at this kind of reprieve on the interest rates as kind of a window that's only going to be open for a while. While there's an uncertainty in the market, you can expect that rates will stay lower, but as Sam notes, they're not expected to hang around for a very long period of time. So here's a quick chart that takes a look at Freddie Mac's 30-year fixed rate mortgage since January of 2020 to today. So we're looking at this to highlight the overall trend mortgage rates have been following. So January 2020 was before the beginning of the pandemic, and we see that the 30-year fixed rate mortgage was around 3.7%. Then as we enter the pandemic, we see the federal government influence rates lower. Remember, they don't set rates, but they do influence them. We ended up bottoming out around 2.7% at the beginning of 2021. Then we see rates start to rise to where we are today at about 3.76%. Actually, the 30-year fixed was up over 4% briefly, as I noted earlier, but due to the geopolitical uncertainty, we've dropped back down to about 3.76%. So why is it important to note that trend? The interest rate you're able to get on your home loan makes a significant difference on how much home you can get and still stay near your desired monthly payment. This chart shows that at a rate of 2.75, nearly what we saw at the beginning of 2021, you can purchase a $400,000 home for a principal and interest payment of $1,633. However, if rates rise to 4%, then you're looking at a home of around $340,000 in order to have a principal and interest payment of $1,623. So this really illustrates the importance of interest rates and where they're heading. As I mentioned earlier, I think we have a small window where rates are at a lower level and the federal government has kind of stepped back from its efforts to increase rates to help fend off inflation. That said, I'm not alone in this view. So here's a quote from the senior economist and director of forecasting at NAR. Following the trend of the 10-year Treasury yield, mortgage rates will likely fall, remaining below 3.9% this week. However, expect mortgage rates to rise later this month as the Fed will raise interest rates. Now again, remember the Fed doesn't control interest rates, but they do control the Fed fund rate. The key takeaway is we're seeing many people saying don't expect these lower rates to stick around. I don't have a crystal ball, so I can't tell you if it's going to be next week or the end of the month when we'll see rates go back up to the higher levels. But I would act as this is a kind of a short-term reprieve from the higher interest rates. So early on in the presentation, you heard me mention the 10-year Treasury yield, and you heard it mentioned again in that quote. So why is the 10-year Treasury yield important? Well, for almost 50 years, the 30-year mortgage rate has moved in unison with the 10-year Treasury rate. So it's a great leading indicator of where mortgage rates are going to likely head. It's important to always keep things in perspective. This chart compares the current rate for a 30-year fixed rate mortgage to the average rate for a 30-year fixed mortgage per decade going back to the 70s. You can see we're still in a very good place compared to where rates have been in the past. So I'm going to finish up the presentation here with this quote from Holden Lewis from NerdWallet. Mortgage rates fell this week as investors sought safety by buying mortgage bonds. This decline in rates is temporary because the Federal Reserve will start its rate-raising campaign in earnest in the middle of the month. So again, another expert saying to expect this decline to be a temporary phenomenon, and that the likelihood is that very soon we'll see rates start to climb again. Many of the metrics and numbers in this presentation are based off of the national real estate market. However, local areas can vary. Please give me a call and we can discuss your situation. Have questions about your specific needs or location? Please contact me at 214-683-8188 or paul@pauldgarrison.com. Want more information about the housing market and related issues? Be sure and check out my blog at www.pauldgarrison.com. Thank you for your time. Please take a moment to visit our website at www.pauldgarrison.com.